Okay, as I mentioned in the Discord, and I had some of the questions about the composite profiles. So let me actually take you through it and how I mark the levels, and obviously why would you use them in the first place. So um, when it comes to the composite profiles, it's basically the same as using the long-term view apps, in a sense that they are going to give you a context for the market. If you use something simple as basic SR basically, or that's kind of most common thing to do when it comes to marking out the higher time frame levels. If you are going to use the simple support and resistance, you sometimes might kind of miss the context. Or for example, if you break from the level, the example would be something like this. When you have a level of support, your kind of a basic price action trading comes with the idea, if obviously the support is broken, we are most likely going to another level, which would be some kind of resistance here, for example. What is great with when it comes to the profile is you can look at these different distributions and get the idea of how if the move basically is going to be kind of fast or slow and obvious, or if we for example trade inside these high volume nodes, you can basically predict the future kind of market environments, instead of just if this level breaks, then market is most likely going to go to another level. The profile overall will give you this kind of context. Obviously the context is the same thing as any kind of other auction market theory tools. So you have your single distribution, and let me actually do this so I can draw. Let's move it a little bit. So let's say you have a composite profile that looks something like this. Okay, this is kind of a double distribution, which most of these composite profiles obviously would consist of multiple distributions. So if price is inside the high volume node, it's most likely going to be in this kind of ranging environment, because obviously you have a lot of executed volumes here, so it will be harder to initiate any kind of move. So this is your kind of a balanced state of the market. And if market leaves this high volume node and accepts below the kind of below the edge of the high volume node, there is often this kind of a sharp move throughout the LVN inside the next high volume node, basically, where market is most likely tend to accept back inside and be ranging again. So this is giving you this little bit of a more context compared to just simple kind of price action trading. And you can also see it if you kind of take a look, and in this kind of a low volume node, where the volume is really missing, you can see how fast market moved throughout this area. If I going to highlight basically this level, and we're gonna take a look at something like H4, you can see that you have this sharp move through it here. You have these kind of wicks, so of course very quick movement here, all the same thing, because obviously there is there was no kind of a volume executed in the past, therefore these areas are just market will just quickly trade through them. But here's the thing, obviously when I learned about this, when I started using this is a kind of a really intraday thing, or it can be intraday thing. When I looked how other people are using it, mostly they were just kind of marking out all these kind of small points of controls, all these kind of edges in the volume profile, and we're just kind of very actively trading through them. But I wanted to have this more of kind of a system which is not going to be just chart full of the levels, but you know, I will just really cover the most important points. And I found out if you are going to kind of link them with the price action confluence, these levels are going to be extremely solid, and you will have kind of this price action concept covered, but also you will have much better understanding of what is market basically going to do next in terms of movement, or you know, if you can expect any kind of ranging or trending environment. So first things first, the profile is obviously the visible range on TradingView. It's, you can see that when I zoom in and zoom out, it changes, so you need to look at your candles to see the full picture. The second option for this would be using a fixed range. Obviously that way you are just going to draw the fixed range and it will stay, so that's really up to you. Which one do you prefer? I'm just having this visible range here. It's this one. You can see here are my settings. You know, I don't have any value areas here because I don't really when you have this kind of a large distribution, then obviously you don't need to see value areas. That's not really important. You can mark out the POC because obviously the POC from the whole composite range is very important one. You can see these ones are kind of equal, and even if I, you know, draw the line, you can see basically how this kind of a pivotal level this was and this was as well. So the POC is always nice to see, but you know, you can just look at the profile and see that. The visibility, this is a cool thing, you know, in TradingView I have just set it up to see it on 12 hours and above, so when I go to 30-minute chart, you know, there is not this kind of a visible range from last few days. You know, I don't really care about that. Which actually brings the question of how much data you wanna take a look at, and I always looked at everything which is kind of relevant. You know, obviously I don't care about this thing down here, but when it comes to something like BTC, obviously this whole kind of a huge range we are in is relevant and important. So I'm not using any fixed times. I know that there are some people who use, you know, yearly profiles, monthly profiles, you know, quarterly profiles and stuff like that. I prefer to just use the composite of the all relevant price action. You know, if you compare this to something like the VWAPs, which I also have here, this is a yearly VWAP, I don't have the standard deviations turned on. You know, this is giving you a little bit of more of that context basically. So because you know the VWAPs, the long-term VWAPs, and this thing, it's basically the same thing, you know, or the purpose of it is the same, you know, it's the auction market theory principles to see when markets are rotational or you know, in balance or outside of balance. If I would have to decide between the two, I would still kind of go with the profile, because you will have this, because obviously if I click on the VWAP and turn the standard deviations, you know, you are missing these kind of little cuts in volume. This is not giving you the full complete context. You know, this is showing you the basically the value area. You know, the one standard deviation from the VWAP can be considered your kind of a value area line, and obviously then you mark out the previous here as well, and you can see how very solid levels you will get from that. But I would still say that, you know, profile, this composite profile is kind of nice and giving you a little bit of a more context. So it's up to you which one you will decide to choose. Obviously the yearly VWAP is kind of simpler, and you can see how really well this reacted from the prior year point of control, you know, the standard deviation from the last year. So you can look at both. Basically it's not going to change too much. These are more of a kind of systematic levels where the composite profile, I will show you in a bit, will get a little bit adjusted. So obviously I know not all of you are trading BTC. If I would look at something like ES, it's the same thing. You know, I want to see the volume distribution from anything that is relevant on chart, you know. So from ES I will be looking at this. From gold also, you know, I want to have covered basically all of this, you know. If I going to take a look at something like euro, obviously you should be better off looking at futures, but the spot volumes are basically the same. Once again, you know, this market is in a clean downtrend. I wanna zoom out to see this kind of a portion to know that there is a point of control here, basically. So once again, you know, using the relevant price action. Also, another thing, this is suited for definitely day trading, and then kind of a intra-week, you know, swing trading. If you are trading based from only like H4 chart, or I don't know, like when you are really trying to capture a larger swings in market, I wouldn't necessarily look into this or go to the detail that I will be showing you in a video, you know. So basically what I kind of do at this point is I'm running two strategies, you know. The executions and everything is covered in a bootcamp, but you know, the one strategy is only set in execution on H4 chart, which I am trading basically all of these markets right here, and for this strategy I'm not using that, you know. I'm only mostly focusing only on price action and this kind of a high relative volume candles, you know, kind of figuring out the ideas around that, you know. Very simple things, you know, the failed swings, coming with the 3 drives, you know, high volumes, and basically more of a price action swing strategy. But the second one I am currently running is this more of a intra-week Bitcoin, you know, only BTC trading system, which is focusing on this 30-minute chart execution, you know, that which I, you know, once again covered in the bootcamp. And for this one I am utilizing these levels quite a lot. So let's actually take a look on this Coinbase chart and let's mark out the levels. So I'm always starting with the biggest kind of a, let me actually extend this a little bit so you will have a better kind of look. I'm always looking at these biggest high volume nodes first. So coming, you know, from, obviously you can go from bottom to top or top to bottom. What kind of stands out to me is this little bit of a point of control here before I go to this high volume node. But if you take a look at this, you know, if I would just mark it out here, let me change the settings a little bit so it's a little more clean. Usually these smaller ones, you know, I just use some dotted lines because they are not so important, but for purpose of this video I will just kind of use the thick lines. So I want to see here what the relevance with the price action was, basically, and also kind of think about if we would go all the way up here, what would actually, how I would use this for actual trade. So if I take a look at the PA, you know, you have this kind of little bit of a higher lows here. Other than that, there was a touch here, you know, it touched here. I would say this is a pretty solid level, but what I usually do, and I don't mind that I will move it a little bit outside of the point of control, is I will match it with the most recent price action around the level, which if you take a look closely, it's this high right here, basically, because this got touched before, you know, the sell happened, and it's still sitting at the POC. Obviously, if you have the line like this and your like closest relevant you know, SR on a daily would be somewhere here, then I wouldn't consider this to be a key level. You know, there is a little bit of discretion coming into this, but you know, like if you will move all the way down inside this LVN, then all of a sudden this is not really a important basically point in for me to mark this out as the point of control. Okay, so next we have obviously the edge of this high volume node. I marked these in red, and you know, this is fairly straightforward here. Let me just delete these things so it's going to be a little bit cleaner. It's these highs basically. Okay, you know, like I said, this is very simple. The most recent price action happened here, so this high is in line with this high volume node edge. But also, if you take a look in a left side of your chart, you know, obviously you have all these kind of tests before that, so it's very it's a significant point. Once again, and obviously how you would then trade this is you can once again do this like level to level, which is the simpler approach. But if, for example, price would accept inside this high volume node, you know, you can play this kind of a auction market theory rotation towards the high volume node edge. If it's going to break, there is a kind of a sharp move towards the LVN. So this is why I mark these levels in colors. So I will know basically what I can expect from price action, you know, price behavior basically. Okay, next level here is the POC. This is a little bit tricky, you know, there is nothing standing out to me too much. You can move this quite a bit and you will have this little bit of a daily cluster here, which is probably something that I would do. But also if you think about this level, obviously you had this cluster, you sold off from it, but you tested it here with this kind of wick. So what I think would be the best way to do it here is to mark out this high, and you are standing very close to the actual point of control, so this high would be the relevant point. And once again, if you take a look to the left, you have the touch here, you know, a little bit of a price action here as well, so I would say this is pretty solid level. Coming down, you have the edge of the high volume node. I do this in green. This is very straightforward for me. It's either this one, this low, obviously this level of support, which we lost, you know, it got tested here as well. You have tests here, or I would mark out this high. I'm not sure if you can see it really well, you know, this kind of high point here. It's basically what I would do. Then I would look to the left. This seems to me as kind of a less relevant level, so I would once again move it towards here, you know, where you had all these tests before. So this is the edge of the high volume node. Okay, so coming down, you have the edge of this one is basically this node right here. It's this one, going to the red color again, and you can see basically, although, you know, the LVN is really here, you can see this kind of a decreasing volume coming from it, and this is your very a narrow side of the HVN. So this is definitely the edge for me, you know. I wouldn't mark it like this, I would mark it like this. This is a similar thing which is happening when we're gonna go all the way down here. You can see this kind of decreasing volume, which market also tends to trade through these fairly quickly. So this is what I would mark it out basically. Okay, so the edge of this high volume node and the level I would line it up is here basically. Okay, the level of support, you know, resistance here, you know, it's once again fairly clean level. We didn't quite get there, but still, you know, and also you can see it as a daily cluster. You know, you had this high relative volume selling from this level after we took out this high, so this is definitely a solid level. If you're gonna take a deeper look, and this is one of those things where your, you need to kind of decide how many levels you wanna mark out. There is this little bit of a LVN inside here, and this high volume node edge is, edging basically here. This is what I would then, I don't mark these with this kind of thick lines. I just do it on like one setting, and there are these minor ones which I then do, for example, with the dotted lines, and you could line this one with kind of these highs, although I would maybe do it here, but this is not the edge of this node, so these are the more tricky ones where you really need to look deeper, because obviously if I would put it here to this high, then it's not the upper edge of this high volume node which I want to have marked. Obviously if you really want to go crazy, you can mark this one out as the minor POC, but that's not something I would do personally. But you can definitely kind of mark this one out as the edge of this kind of a minor high volume node edge, and then your most relevant price action is this high right here, and you can see that basically we topped here. Okay, so coming down to the profile, there is a POC for this level, for this high volume node, which I would then put here. Okay, you can see on the profile, this is the POC level. Your price action is here basically. Something that I forgot to mention is you want to mark these with charts, when it comes to BTC, where obviously there is a lot of volume trading. So your spot markets, the Coinbase, spot on Binance, definitely solid choices. If when it comes to perpetual futures contracts, I'm looking at the FTX BTC perp and the Bybit BTC USDT, not the inverse contract, but the USDT has a more volume nowadays, so these I would use. But Coinbase is always kind of or go to solid choice if you want to trade perps, or if you are trading perps and you want to have it all in one chart, then perps on FTX, or the the USDT contract on Bybit basically. Okay, so edge of this node is right here. What is the relevant price action here? I would say basically this, because you have this can be viewed as a daily cluster. Okay, you have this kind of daily low which it tested. I might move it in this case even lower, but no, I would keep this one right here, because you have this clean touch here, this is very clean level, and this is also the prior year VWAP on Coinbase, so definitely solid level right here. Then we are coming into this little smaller high volume node, which we are here currently. The edge of it sits basically here. This is not too clean like this. Okay, it's a little bit cleaner. I would move it, basically you can see it now, it's a little bit better. I would set it in here. Okay, the edge is basically this area, and you have this kind of a touch on a daily chart as well, so this would be the level for me. From you have kind of two equal POCs. I would, when you have two POCs like this, I once again would look at the daily chart. I would go with this one, because you have this kind of a level of SR surrounding it basically. You have this kind of high here which you broke, so you have this kind of a daily cluster. So this is where I would draw the POC and move it just a little bit. You can see once again this small daily wick here basically. This would be my point of control for the small one. The cut on the volume on the downside is nothing to really run home about, but to kind of end this high volume node, the small one, I would probably put it here. But with these smaller ones, this is definitely gets a little more complicated, because obviously, you know, they are not these nice distributions. So, but yeah, I would basically, how I view this level is this kind of a daily cluster with the POC. So really, it's for me kind of crucial to see this one hold overall, you know. So this would be that, and then if we are going to go down, there is this last one which has a edge, very clean here, daily cluster, these resistance touches. POC is basically right below it, which is then this daily touch of the candle right here, so this is covered as well. And the edge of this one I would put all the way down here basically, okay, because this is really where the volume is dropping off, and you have this kind of a touch here. You know, we never really managed to get there, but still this would be the level for me basically. So yeah, fun thing, you know, if I change the perps on by a bit, you know, this is FTX, you can see, you know, I had this, so yeah, I wanted to basically see if, you know, as I redraw all the levels, if they would be the same as I did now from the blank chart, and yeah, they basically are the same. This one was different, you know, which in retrospect this is the better level, but overall, you know, the lines are same. Obviously, I'm not marking out these because it's not relevant, you know. If you want to have your charts clean, you can see how this looks on this is how it looks on my chart basically, but you can really just kind of, you know, that's up to you if you don't mind to have all these lines on your chart. But if you take a look at if we are now going to take a look at the 30-minute chart, you will see basically how market kind of responded at these levels. You know, this is your edge, this is we lost the point of control, tested it here, you know, formed this QM. Now the last thing to mention is how I actually trade around these levels. The levels work mostly as a map for me, you know. It's not like I'm fully, you know, aware that they can get kind of you know, squeezed and traded through. I don't expect to be them 100% perfect, for example. So if we are going to take a look at this little section here, okay, so we're gonna start here. You know, you have your cluster here. Basically, this is a solid kind of a trade here. If you wanna be buyer here, because we are still technically inside this HVN, like I said, you know, this is, and this, for example, this situation right here is that the rule of this of the auction market theory, because this is your, you know, the high volume node basically, and you are hitting the POC, you can't move to the upper side of the distribution, and you are just kind of a consolidating at the lower part of the edge. So if you remember these auction market theory rules that I covered in bootcamp and in the blog, if market is kind of sitting at this value area low, you know, at this edge of the distribution, it's very likely to break down. So this is when your auction market theory comes into play. But even if you want to be buyer, let's say, you know, for whatever reason you want to be long here, and you know, obviously market at that point is kind of trading somewhere here, where would I buy this thing? You know, would I just place my limit order inside the edge of the high volume node, or would I, this is the monthly VWAP, I believe, would I just bid the monthly VWAP, you know, planning to play it at least to the POC? No, I am always, everything that I do, every trade that I take is boiling down at the most kind of the execution standpoint, is coming towards the 3 execution patterns that I use, you know, the cluster, the failed swing, and the QM basically. So if I want to be buyer here, after we kind of accept back inside this high volume node, I am buying only here, you know, because this is my cluster. I can, you know, put my stop below the low. This is the level that I'm buying. You know, I'm not buying at the VWAP. I'm not putting my limit order at the edge. I am buying the cluster setup, you know, which would be, I would use these two candles basically. I know someone asked this in the Discord, you know, when I have cluster like this, you know, which doesn't have this kind of a compression below, you know, because we took out the low before the move higher, you know, I would bid these last two candles basically to play this long. You know, this is actually super important, because I know some people just draw all these levels and then you know, would just trade at them, but market will very often squeeze them, you know. When, if you take a look at this, for example, you know, we broke below it and we tested it here perfectly, sold off. You know, this is now would be something, because you are basically trading a SR flip at this point, which is not my favorite thing to do, because, you know, let's say you are only playing it from level to level, you are not expecting this kind of sell-off, and you are trading here at the point. So you can basically do two things then, you know. You see the SR flip, which, you know, obviously have support here, you flipped it, this is your kind of a last touch before the low, and this is your next level where market can turn against you. So is it worth to take 1.7 R trade, because your stop has to go above the high, you know. There is not really, because you have the small cluster here, you know, this can easily squeeze. So this is one of those things when it's really up to you to decide, you know. You have a POC from this day as well. This is really up to you to decide if it's worth taking or not, you know. This is not the trade that I would take. I really try to stay above this 2R line all the time, but if you want to take it, you know, that's really up to you, you know. So once again, the trade that I took yesterday, you know, we had this edge of this high volume node. We tested it here, and then we formed this kind of a QM, you know, at the level, basically at this level, after taking the prior day high. So I don't really mind the fact that, you know, this not getting tested. I'm just trading the continuation lower basically. But this is my kind of a map, you know. We are back inside the next high volume node because we are below the upper edge, you know, moving down towards the POC currently. My take profit for this trade was hard to say. I had a level here where I took profit into, which was, let me actually see because I'm curious myself. Yeah, this kind of a small edge, you know. You can see this is where your kind of discretion comes in. I marked out this small upper edge in the profile because it was this kind of a daily low, you know, basically below. If you take a look on H4, you know, this was this kind of a H4 low, and yesterday low as well. So I you know, Friday evening I didn't want to really take a trade, you know, or try to run it towards the weekend. So I was very happy to take profit into this low, although there is a POC below and there is a high chance we will run this compression. Once again, you know, this was around 2.5 R, which is, you know, coming into Friday evening. You can see where I basically took profits right into this low. If I'm going to go into 1 minute, yeah, basically you can see the candle which hit my take profit was this one. So yeah, you know, it's one of those things where more kind of decision making going to take a place, but in my opinion, this is probably the best way to looking at the market and understanding the overall kind of context, you know, besides very kind of simple, you know, I have a resistance, you know, if it's going to break, it's going to retest something and then it's going to up somewhere, you know. I don't know where, I don't know how it's going to go there. If you will use something like this, you will, for example, know that you have this high distribution here with a massive LVN, and there is next kind of a distribution above that, you know, excuse the terrible drawings, but even if you're, because for example, okay, let's actually be a little bit more precise about this, and this is going to be the last thing which I will show you before I cut this. This is already a little too long. Okay, let's say that you have your price section that is looking something like, you know, this basically. Okay, so you have your resistance, you know, market is trading somewhere here, and then it's going to flip the level, and you know, you are taking a long basically on a SR flip. Since you don't really understand the overall context, you will take profit into the next daily level, which is this small kind of price pause, you know, here. If you have something like a composite volume profile, obviously you will see that there is a huge distribution, you know, happening around this level. Then you have this big LVN, and then there was just a small, very small amount of volume executed in this small part, and then there is another huge LVN, and you know, then you know, your PA would look something like this, for example. So there would be another huge high volume node. So this is one of these really cool things that you can just accept. Okay, there was just very little volume executed here. I will go and run this because there is really nothing, you know, there's this huge liquidity void above the price, so I can run this into here. This is basically why I use this instead of just simple price action. Okay, I hope this covered the topic. This was fairly long, but yeah, I think, like I said, very useful thing, very useful concept for your trading.